All right, we got some consolidation and another test of resistance, which is bearish for natural gas. But before we go further, a quick word from our sponsor. This video is brought to you by NatGas, the world's largest retail broker offering ultra-fast execution with no overnight fees. Find the link in the description below. This is Bruce for FXEmpire, taking a look at the daily chart for natural gas. Okay, quick review. We have a false breakout above this top channel line, a bearish candle on that day, which was Monday, and a subsequent decline. It tested support at the 20 moving average purple, broke through. Tested support at the trend line, broke through. Retraced up. Now those areas become resistance, and we have an inside day today. So this sets up natural gas for a possible continuation of the decline, signal on a drop below today's low. I'm sorry, yesterday's low, this week's low of 396, with the next lower target around the 50 moving average at 383. And if that fails to hold as support, then we have this previous swing high here at 374, along with the 61.8% Fibonacci retracement at 372. However, this swing low is critical because it makes up the price structure of higher swing lows and higher swing highs of this portion of the trend. Once it's broken, there's a possibility of falling down to the next angle of ascent, which is represented by this trend line, which represents a bit of a larger trend. And so this small trend is contained within the larger trend. So and then on the upside, a breakout above today's high is a sign of strength, 414. But really, natural gas would need to get above yesterday's high of 420 before there's any assurance that any kind of bounce may continue at that point, because these are areas of resistance. Not necessarily specific prices. And interestingly, you can see the 20 moving average has converged with the trend line today, and they're identifying the same price level. For those who have followed me for a little while, you may remember this pattern of dropping through support, retracing back, testing the 20 moving average, and then spiking in the direction of the trend. This has happened on the upside a few times and on the downside a few times as well. But it is a setup to be careful with, because for the upside anyway, because you could have an acceleration to the downside if it follows through in that way. It's not necessarily going to do that, but that potential exists. Okay, that is it for natural gas traders. Have a great weekend.